This is your host, Stephen Sargeant. We just had an amazing conversation with Lee Bratcher. He's the president and founder of the Texas Blockchain Council. We talk all about Bitcoin mining in Texas. We talk about all about politics and crypto and digital assets and Donald Trump. But there are amazing conferences coming up. So we talk about Emmett Smith and Terrell Owens that are going to be at their conference coming up probably next week by the time this podcast airs. This is a great conversation. Lee is really tapped into everything that's happening at the regulatory level and the state level within Texas when it comes to blockchain, Bitcoin mining, data centers. You have to listen to this episode. Super exciting to see his conference come to fruition. And for you Canadians that follow me, because I'm a Canadian, there is some amazing nexus with the Canadian Blockchain Consortium, Kalea and Jade, and the amazing work that they're doing with Lee. Check out this episode. Reach out to me and Lee and let me know how you like it. Talk soon. This is a special edition of Around the Coin. We have the president of the Texas Blockchain Council. I'm your host, Stephen Sargeant, and we have Lee Bratcher. Lee, you're the founder and the president of Texas Blockchain Council, which is a huge and probably industry-leading, I think, association when it comes to digital assets, especially coming out of Texas. Why don't you give us a little bit of background? I'm going to talk about your early days, and then we're going to get into what you guys are working on there in Texas.
Yeah, happy to, Stephen. Thanks for having me on. I founded the TBC in 2019. At the time, I was a political science professor here in Dallas. I had been in the military, discovered the Bitcoin white paper while I was at the Army War College researching property rights and writing some papers around how people, when they're secure in their property rights, are less likely to engage in interstate conflict and they're more likely to have flourishing communities. So the concept of Bitcoin as digital property rights, something that can be scarce and fungible, and it really resonated. And so I did my dissertation on blockchain land administration and the tokenization of real estate. And from there, I realized that there was a kind of a gap in the market. There was at this time, in 2019, but now there's a lot of people who do this really well. But at the time, there weren't very many people who were liaising between the builders and regulators and policymakers. So that was the inspiration for getting the TBC started.
Have you seen, since blockchain, land registry, I know there's a couple of pilot projects I think I saw in India, maybe even Sweden. Have you seen anything come to fruition over the last 8 years? Because this is still, especially with so many refugees moving country, like there's that land rights is huge. Have you seen any viable products coming out of that?
Yeah, there was about 40 pilot programs across the world, and you named two of the more significant ones in India and Sweden. My thesis and the thrust of the dissertation was actually this is not a technical problem. The technical capacity is there; it's been there for a long time, but there are, from the land administration perspective, there's too many veto players that benefit from the way the things are done now. And so I've always thought and hypothesized, and this has kind of come to fruition, that innovation in land and real estate is going to come from the private sector, and it's going to come around sort of commercial syndication, bringing capital together, bringing more liquidity, kind of like what Figment is doing and a lot of other companies, Proppy and Securitize. And even that industry, I think, is a little bit challenged through lack of liquidity and too much decentralization around, and not decentralization in the good way. What I mean is too much fractional attention. The ATSs don't have enough mind share to command, the investor base to actually make it work. So we're still a few years out, both on, I think we're probably 5+ years out on the public, sector side of counties adopting blockchain for land administration. And we're sort of in the midst of the early stages now, and probably between 1 and 5 years out from a pretty strong S-curve starting out for the private sector tokenization of, basically upending the syndication industry.
I'm curious because you said you started TBC in 2019, and there was a huge gap maybe between bringing together builders, the public sector, even some of the private sector giants. And it's because, after the 2017 chaos and the plummeting of crypto, nobody wanted to talk about blockchain. Everyone was like, hey, look at this Bitcoin thing. And then the industry completely tanks. Why did you decide at that time, you know what, let's go even, let's double down and build something here at that point? Because that has to be, that's usually when a lot of people leave the industry versus when someone like yourself says, no, we need more conversations. Was there something you're like, I see this being long term, or I just see we're having these communication, these meetups. Why don't we make this a little bit more formal for the people that really want to build in this space?
Yeah, I had a long-term conviction. Around 2018, I realized that this is the industry that I wanted to pivot my career to for the long term. So I knew the timing doesn't always work, but it ends up that we built the infrastructure before the 2021 bull run, which was quite helpful. So we had, we were slogging through a bear market, and then we were ready and there. So in the same way that a startup founder, builds a company in the bear market and they're there for the bull market, we build the association in a bear market, and we're ready for the bull market 2021 and the China ban for Bitcoin mining, which really set off the Texas Texas miracle, if you will, with regard to Bitcoin mining. And now we're about 18% of the global hash rate.
I love that. Can you tell me about your association specifically? There's so many associations now popping up. Everyone's looking at policy or lobby for their certain constituents. What is something that you think that you're a differentiator on? Is there a specific, avenue that you're like, hey, we really go hard? I know we've talked about on other podcasts, or you've talked about on other podcasts, amicus briefs. Like, you have no problem getting into the legal framework and mixing it up a little bit. What do you think makes TBC a little bit different than maybe some of the associations out there?
Yeah, we specialize in a few different things, and we try to focus on what we're good at and let other folks do what they're good at, right? So we don't do hardly any work on Capitol Hill with Treasury, with the IRS. That we leave that to organizations like the Blockchain Association in DC. Where we specialize in is state level policy, both in Texas and beyond, particularly Bitcoin mining. Of course, we passed the Texas Strategic Bitcoin Reserve. We work a lot with Coinbase, Kraken, Crypto.com, Blockchain.com around financial services, money transmission policy, proof of reserves, that kind of thing. So we try to carve out niches where we have expertise and try not to spend too much time in areas that we don't. And we have been pretty successful in being, you said, amicus briefs. We have been pretty successful in litigation against the federal government and other entities, particularly because Texas is a favorable jurisdiction to go, be on a level playing field with the federal government. So it's the Fifth Circuit is Texas and Louisiana. And we feel like Texas is well positioned with judges that are neutral arbiters, whereas in some of the other districts, particularly the DC Circuit, is a little bit deferential toward the federal government. And so we found that, especially when the federal government oversteps, particularly during the Biden administration, we were able to step into the void there.
Tell me about that. You're 2019, you're going into the Biden administration, Bitcoin prices are down, you're building an association. What was it like dealing with now two different parties? What's that been like? And do you think, tell me what that's been like first, and then I want to talk to you about like what are some scenarios that come up, in the next election.
Yeah, the first Trump administration, we were persona non grata because of Stephen Mnuchin. And, our first, I guess, foray into this litigation side of things was when Elizabeth Warren pressured the Department of Energy and the EIA, Energy Information Administration, to single out Bitcoin miners and seek information that was competitive and proprietary beyond what the law permitted them to do. And so we partnered with Gray Reed and some local counsel and Riot Platforms, one of our members, and very quickly, with a matter of about 12 days, defeated the Department of Justice and the EIA in some legal action. And we've been cooperative with the federal government as much as we can, and certainly with the Texas, Public Utility Commission, with ERCOT, so if anything, we lean towards cooperation. But there were a couple occasions where we just thought, hey, this is wildly inappropriate, and this can't be permitted to stand. So those experiences were, set us up for doing a lot of amicus briefs and working with some of the big players in litigation against the SEC and other parties in DC.
I'm curious because, even when I've seen you do podcasts years ago, before the Trump administration, or before even, a lot of conversations in the US about digital assets, it seems like you had a lot of support from Republican parties, very important members coming to talk at your conferences, have open discussions. Have you noticed that even in, the previous election, like you see Trump going on podcasts like All In Podcast? Is, digital assets feel bipartisan now? It feels like we've gotten a little bit of legislation coming out there that doesn't matter who's in power, we're still going to have digital assets, stablecoins built here in the US. What are your thoughts about that? Have we gotten a little less political? Is it still political? And how do you navigate that with the association?
That's a great question. I appreciate you posing it. It's pretty nuanced. At the state level, typically it's not a straight left and right thing. It's normally around education and not like formal education. Obviously, all these elected members are very educated, more so around how much time they've spent learning about digital assets and whether it's a new concept to them or not. If it's a new concept and they're like perhaps, more experienced, an older member, a rural member who deals with other things rather than financial services, they're likely, and oftentimes those are Republican members that are likely to be cautious or negative towards the industry. And then you might have some suburban Democrats that are younger that just understand natively digital. And so it's pretty nuanced. And, even at the federal government level, it's nuanced. Obviously, the Trump administration has appointed some incredible leaders, Atkins at the SEC. You've just got hopefully we get Brian Quintins at the CFTC, but we've got Caroline Pham, who I'm sure will stay there as one of those commissioners. Just incredible regulators. Although, we have even seen from the Trump administration some inappropriate stuff, like the launch of the Trump meme coin, the Melania coin. So there's things that the Trump administration has done that have been very bullish for the industry and that we think are the right course of action. But there's also things that the Trump administration has done and that we've called out and said, hey, that's not right. That's not helpful for the industry. And so it's a tough, the fact that it is so tough means that it is becoming a nonpartisan thing, right?
Right.
It is still somewhat partisan, and we're working to try to make it nonpartisan.
I'm curious. The Trump administration, just signed executive orders around the strategic Bitcoin reserve and the digital asset stockpile. But Texas actually passed a bill around its own strategic Bitcoin reserve. Why is that important at a state level, do you think? Especially since not all the details have been figured out at a federal level when it comes to the strategic Bitcoin reserve. Are you taking the ethos and running with it in Texas? Is it going to be closely resembling what's happening at the federal level? And, this is probably something that you were pushing for. Is there a reason why you think it's important to Texas and its residents?
Yeah, we were certainly pushing for it. And Texas will likely be the first sovereign entity in the United States to put Bitcoin on the balance sheet. Obviously, through direct purchases, right? Obviously, the federal government has some Bitcoin through seizure. Other states have it through the same mechanism. New Hampshire passed a strategic Bitcoin reserve, but they did not allocate any budget money to buy Bitcoin. So Texas did allocate $10 million in the budget to buy Bitcoin, which is a small portion of the budget. It's 0.0004% of our biennial budget, which is obviously a pretty insignificant and negligible amount, but it is sending the right signal. A key factor here is that Texas has a budget surplus. Texas is very fiscally responsible. Those funds were a surplus that could have been invested in any number of things. Texas has lots of assets that at our disposal. Oil and gas assets fund a lot of our public universities through university lands, and the state of Texas has assets that are in U.S. Treasuries and in any number of investments. So this is just a very small, fiscally sound investment that paves the way for more work. But what's more important is it sends a signal that Texas is going to be home for capital markets. The future of capital markets, Bitcoin, digital assets are going to play a role in the future of capital markets. Texas understands that. So it's part of that larger narrative that says, come to Texas, invest here, build here. The government is, we understand it at the government level, not everyone certainly. And what we don't know, we're going to ask, and we're going to educate ourselves, and we're going to bring in partners to help with custody and other things of that nature. So we're optimistic. Texas is growing like crazy from a GDP perspective and a population perspective. Even Dallas-Fort Worth, 200 people a day move to Dallas. And we have the New York Stock Exchange coming, NASDAQ, the Texas Stock Exchange, all descending on Dallas. Of course, the tech sector in Austin is really strong, and Houston is the energy capital of the world. So we feel like we have a pretty diversified economy here that was at one time oil and gas centric, energy centric, commodities centric, agricultural, but now is leaning really hard into financial services, technology, innovation, the medical industry. So incredibly diversified economy. State's growing like crazy. The GDP is growing. So we're optimistic.
Have you felt the shift? I think, the last 8 years, a lot of builders, entrepreneurs from Silicon Valley have kind of migrated to Texas. It's become the new kind of like fintech, tech hub. Have you felt that switch, like crypto? Have you felt can you feel a physical switch like that go on as you're driving through the city? You're like, hey, I didn't see this building a couple of years ago. Do you feel that?
Absolutely. I mean, I'm looking out my window right now at a building that Goldman Sachs is building. They're bringing 5,000 employees here. Scotiabank, one of the largest banks in Canada, just announced they're bringing 1,000 employees down to Dallas. It is growing like gangbusters. The real estate industry is depressed across the United States, particularly office and office space, but it is not in Texas, in the larger cities in particular. So we're insulated from a lot of that here.
Hey man, I'm in Canada. I'm in Toronto. When I see on Instagram some of those properties in Waco, Texas, for like 600,000, and I see the sliver of land you get here in Canada for twice as much, it has a lot of people thinking like, yeah, hot, heat, nice vibe, tech. You mentioned an interesting stat that Texas accounts for 17% of Bitcoin mining globally, I believe. I think 36% of the mining power is coming directly out of the US, and you account for half of that. Where do you think Texas aims to rank on this global scale of mining over the next 3 or 4 years?
It's a good question. The big factor throwing a wrench into Texas becoming a larger percentage of the global hash rate is AI data centers. There is a big fiber line, backbone of sort of the internet between Dallas and Denver. And many of our Bitcoin mining companies have data center sites on that line, and they're able to, they're prime sites for AI. So a lot of the hash rate in Texas, I'd say up to half, could be converted to AI. And that other half is perhaps not in an ideal location and is not capable of being converted for training or inference purposes. So, and when I say training, I mean model training, AI model training. So what we're seeing, the core site in Denton, we're seeing different companies, Riot, Cypher signed a deal recently with Google backstopping it from a financing perspective. A lot of these companies are making pretty profound strides in the AI realm. And so Texas is going to be the data center capital of the world. Part of that's going to be Bitcoin mining. Part of that's going to be AI, and part of it's going to be traditional cloud and traditional data centers.
And how do you look at it, like from a profitability standpoint? Is it like more profitable to do AI, especially like with the growing demand in the future? Does Bitcoin make more because you're mining Bitcoin and the price keeps on going up? Like if you own a data center, how do you decide which way do you want to go? Or do you say, hey, well, why pick or when we can do and? We can do half Bitcoin mining and hedge that with half AI data centers.
AI compute right now, there's a pretty significant arbitrage there. So it's far more profitable than Bitcoin mining. Hash price is pretty depressed. We're over a Zeta hash. There's just a ton of competition on the Bitcoin mining side. So margins are tight. So anybody that can convert to AI is going to convert to AI. The sites that can't are going to be the ones that are remaining Bitcoin mining. And the ones that can't are typically pretty rural and get very low energy prices anyways. AI compute doesn't need to chase the lowest price. Those companies will pay a lot for their electricity because the demand is insatiable at the moment. So you could see them paying double, triple, in some cases quadruple what a Bitcoin miner can afford to pay for energy. And that's really the dynamic that drives whether a site's going to get converted or not.
That's interesting. I didn't think about that. I didn't think you just can convert everything. Just, yeah, you have to take in other factors. One factor is weather. Like in Canada, we've had windstorms. There's been some crazy weather over the last 3 years, I feel like. How do you, like, quote unquote, weather the storm during, downtimes like Bitcoin mining? There's outages. There's, as you said, there's so much infrastructure that could be impacted by a bad storm, which it seems like Texas and a lot of the US states get those storms. How do you like keep that into account when you're building some of these sites, when you're trying to do Bitcoin mining and you can't afford to have those outages?
Yeah, so I'll talk about weathering the economic storms and then the physical, weather storms. So these industries are very cyclical, and right now AI, the profit margins are very strong, but that gap is going to be closed. That's just the nature of markets, right? So people are piling in; those margins are going to compress. Bitcoin mining's margins are not good right now, but the nature of the network and the difficulty increase, if you have a fast run up in the price, say from 110,000 where we are today to over 200,000, Bitcoin mining looks a lot more attractive because that was a quick run up. The difficulty didn't jump fast to keep up with the price, and so hash price goes up. I think we're probably a year away from those margins kind of meeting in the middle, where there could be a time a year or two from now during the next bull market where Bitcoin mining is more profitable than AI. Certainly not the case right now, but I see those things dancing sort of this symbiotic dance where the margins will increase for Bitcoin mining at some point because of the nature of markets, and vice versa for AI that might compress. And then some new model is going to come out that needs 10x of the amount of energy, right? Javon's paradox says that the more efficient we are with any sort of energy consumption, the more we are going to use it. So any process, if you will, that becomes more efficient, you might think, oh, we're going to use less energy. So NVIDIA comes out with cheaper and faster and more efficient chips. Oh, well, we probably don't need as many NVIDIA chipsets to do the same amount of compute. Well, that is true, but Javon's paradox says we're going to use a lot more of that resource. So as things become more efficient, you actually use more of the energy.
That makes a lot of sense, actually. As someone that probably watches and listens to a lot more all-in podcasts than the average Canadian, the big talk is this energy race that we seem to be in with China and the struggle to produce more energy. Are you and your constituents within the council, or just in general, very energy-focused state, are you concerned about this? Do you feel it's a race more than anything else? And how does this reliance on energy for AI and Bitcoin mining, how does this impact you and your industry?
It is a race. It is a race to generate more electricity and to do it in a more efficient manner. The Department of Energy just put out a RFI and request for comment around how the United States can win in this battle for energy dominance. And at first I thought, well, we need to install a lot of small modular nuclear reactors, SMRs. And that takes a lot of time and money, and that's a good thing. We should do that. But then I realized the number one factor for the United States to win at energy dominance is to be more efficient in the way we use energy, and particularly around transmission, planning, site development, and interconnection requests. So the number one thing that I would say, and that we will say in our comment letter to the Department of Energy, is let's get FERC and NERC, the Federal Energy Regulatory Commission, to design a non-firm load category to allow for interruptible loads. And then you could put, in some circumstances, twice the amount of data center compute on the site that would previously have served half that amount. So a non-firm category with interruptible load. And there will be some types of AI that's interruptible, some kinds that are not, right? You could shift load around depending on geography and time of day on the inference side. And you can also, sometimes training load is interruptible, sometimes it's not. If it's in the middle of a training run, you don't want to interrupt it. But if you're done with your training run and deciding when to start the next, you might say, hey, let's wait until nighttime. Let's not start it here at 4 p.m. when energy prices are super high. Let's wait till 10 p.m. So that is a form of flexibility, and the companies that get better at that are just going to be more profitable.
Is there any side effects? I hear like, okay, we're racing against China, and I don't know exactly how they run things over there, but the kind of like hit on them is like, hey, they're not going to follow all the environmental or the regulatory, the checkpoints, the guardrails, and that's why they're able to move so fast. Is there any concern with us racing against a competitor that might not be taking into account a lot of other things that we should be taking account for in our society, and we end up running into side effects that just because we're racing, we're not focused on everything else that's happening as we run by?
Yeah, I think there's some risk to that. I think the greater risk, though, is handcuffing ourselves too much. Okay. China produced more solar energy generation than net new solar last year than the United States produced all types of generation. So just in solar, they built more new solar than we built new all categories: wind, solar, nuclear, gas, natural gas, hydro. Right. So that's a concerning dynamic and trend. And so I think the greater risk is that we handcuff ourselves against an industrial juggernaut.
Is there a point where it's like, hey, we're going to be way too far? If they're producing 8 times more energy than the US every single year, it's like we have to start doing something by this year, or else we're going to be in trouble. It's going to be too far, that gap, 8 times every single year compounded over a decade. We're going to be way too far to even compete. Do you think of it in terms of like, hey, we need to start doing something by this time, or else we're really in trouble? Or are we at that point now where we're really in trouble? We need to do it today.
Well, I do think we need to do it today. I think we absolutely. I mean, energy infrastructure takes a really long time to build. So if you're not starting today, you're already years behind. And we are starting. We are unleashing competitive forces, particularly in Texas, in PJM, some of these other ISOs around the country. There are some backward-looking ISOs, like in California, that are just a disaster. But a lot of these grid-serving entities and organizations are pretty forward-looking. TBA, kind of in that Tennessee, Kentucky region is very strong as well. So we also need to invest more in building the factories that produce transformers and transmission equipment. That is, substation material, transformers, and transmission equipment is probably the biggest bottleneck right now. And I think our industrial capacity in those areas has been lacking, and so that's probably where I'd suggest that. And I think the competitive market, there are companies that are. Giga Energy actually just announced they're building transformers in Houston, right? Which would have been unthinkable 3 years ago. You would just outsource that to, Italy, India, Bangladesh, et cetera.
At the start of this conversation, we talked a little bit about the legal proceedings you've been involved in. It's been about 15 months since I heard you on the Chainalysis podcast, which was a great episode. what is the state of those amicus briefs? Are those lawsuits all gone? Is there still some remnants of maybe overreach by the SEC and other association or other authorities in the U.S.? Where are we standing with a lot of those amicus briefs? And then, like, what happens when there's a change of, Gary Gensler's out and somebody else comes in? All that work that you've done, what happens at that point?
Yeah, most of those cases have been resolved. So the most common scenario is kind of the federal government decides to either drop the case altogether, or there's some sort of stay, and we're in a holding pattern. But in most cases, the judge has sided in favor of the industry, or the federal government just decided to not pursue the case anymore. So we're not currently involved in any litigation at the moment.
And one of the reasons is because now they're etching out a lot of these regulations, guardrails, and guidelines in actual law. We have the Genius Act that's passed through, and the Stable and Clarity Act seem to follow. What do you think is the best case for these? Like, maybe give a high level of how these acts impact you and the work that you've done, and maybe just talk about the process. Obviously, you saw this coming. You've probably made commentary or proposals based on some of the things that you saw. Maybe give us a high level of how the Genius Act could help the U.S. citizens.
Yeah, the Genius Act was a great win for the industry. Of course, that's the act that regulates the stablecoin industry. The market structure bill that's worked its way through the House and now in the Senate is on more tenuous grounds, particularly because Democrats in the Senate are a little bit frustrated at the Trump family for being so involved in the crypto industry. So there's, they're kind of shouting conflicts of interest potentially. And so that's put pause on that legislation. Although we're still optimistic that it could be signed into law by the end of the year. That is unclear at this point. But one thing that is interesting is the banking lobby is actually trying to insert language into Clarity that would really hamper and change the rules of the road that the Genius Act set out around stablecoins and around stablecoin rewards. I think everybody kind of agrees that, stablecoins, the issuer can earn a yield, but the holder of the stablecoin perhaps shouldn't be earning a yield on their stablecoin. That looks a little bit different. It's more of a security instrument than a payment mechanism.
It gets into that investment and retail. Yeah. Okay.
So that's kind of the way things stand. But the banking lobby is a little bit anti-competitive, and they're trying to prevent even folks, exchanges like Coinbase, from offering rewards for holding stable coins, essentially saying, hey, we don't want competition. Right. As banks, and those are mostly the big banks. I think there's a lot of innovative regional banks that said, "Hey, bring it on. We're ready." But that's a little concerning. That we need innovation, right? We need competition. That drives us out of stagnation, and the banks are advocating for stagnation, which is disappointing.
And is the debate that, like, hey, we're not calling it interest, we're calling it a reward, or they're getting other tokens? Is it the banks aren't liking the loopholes that the industry is trying to go around? Like, hey, we're not giving them interest, but if you do invest this amount or you do use a stable coin, you do get these tokens, you do earn these tokens. Is that the issue with the banks? Is like they want it set out that they can't receive any other benefit other than the amount that they're dealing with?
Right. Yeah. Which is, again, a little bit hypocritical, because many banks out there are taking deposits and paying you no interest in checking and savings accounts, and turning around and making pretty sizable returns on that capital. So that's, in my opinion, quite hypocritical. And certainly the holder of the stablecoin is not going to reap a full 4 or 5% based upon the rewards that that reward might be pretty worthless, right? And it might be worth something, but that's competition that at play, right? So they should not be able to compete with a money market fund, right? Money market fund is going to be sort of that, highest potential yield for a risk-free investment, like a short-term treasury. Banks certainly don't compete with that typically in their high-interest savings accounts, and they certainly don't compete in traditional savings accounts. I mean, if you got your money in Bank of America is paying about 0% interest.
You might as well just put it under your mattress at that point. And what's kind of funny is like the banks offer so much rewards to get the deposits on the front end and then pay no interest. And now the crypto industry is like, say we're just offering rewards after they make the deposit. So it's kind of like this funny thing is you can get an iPad for depositing money, but the second they make interest, the second you earn a meme coin for investing in USDT, there's an issue, which is kind of funny. I've seen you, Kalea Jade of the Canadian Blockchain Consortium. It looks like both your associations are doing great work. You come from the, very much like Texas and Alberta seem like very like, we're like the Texas of the North and you're like the Alberta of the South. But we have seen that stablecoins have been classified as securities in Canada, which kind of like lack or at least limit the potential for them. What do you think about this decision? Will this leave Canada outside of the crypto conversation for years to come unless something changes?
Yeah, it was a short-sighted decision, unfortunately, but I am optimistic that groups like the Canadian Blockchain Council can educate and get those things changed. We've partnered with Kalea several times on different trade missions, and we're actually co-hosting a dinner during the North American Blockchain Summit with Kalea. She's bringing down 2 ministers from Canada. We're going to have conversations with them on stage and also have sort of a Texas-Canada connection VIP dinner at the Bush Presidential Library at Freedom Hall. It's going to be a lot of fun.
That's awesome. And they're doing hard work. And I think, had the Liberals not won that last election and, a lot of their Pierre Paolo conservatives are the ones really embracing what she's doing out there in Alberta. I think I just saw on LinkedIn they were having a conversation with some of those ministers, including Pierre Paolo. I'm curious. We talk about the North American Blockchain Summit. This is your flagship conference. You have some of the most well-known industry experts. Nostalgia hit in when I saw Emmett Smith and Terrell Owens is going to be there too. But you also have politicians and builders in this space. What can we expect this year at NABS?
This year we're focusing quite a bit on industry and on the builders. In years past, we've focused a lot more on policy, but great strides have been made in that area. So we are focusing a little bit more on the builders and on leadership. And that's why you saw kind of Emmett Smith, TO, joining us to talk just general leadership. And I think there's a need for us to mature as an industry. And I think Emmett Smith is a great example of somebody who, spent a long time in the NFL, was a Hall of Fame running back. He kind of matured the Cowboys. He and Aikman matured the Cowboys in the 90s. And now Emmett is a businessman in his own right with several different investments in real estate, energy, and other industries. So kind of a good example of sort of that leadership and maturing over time.
And what's it like? I'm sure there's a lot of pre-conference conversations. Are they interested in crypto? Like we saw some NFL players taking Bitcoin now as salaries. Is there much more of a conversation of like, hey, like had I taken Bitcoin as my even half my salary instead of getting the not saying him specifically, but instead of getting the mansions and the parties, it's a totally different conversation now. Do you find like more sports players are coming to these types of conferences, learning how they can invest their wealth?
Yeah, we do. And particularly with Emmett Smith, his son is very into digital assets and crypto. He, I believe, is a college football player at A&M. And he's the one that's been talking to his dad about the industry. So, Emmett Smith is not a spring chicken anymore. And it was kind of that generational divide where his son was like, hey, you need to get on the bandwagon here and understand this stuff. So I wouldn't be surprised if he slipped him a copy of the Bitcoin Standard or some kind of literature book that helped him get where he is today.
I'm assuming we're close enough in age that like having Emmett Smith, is this kind of like a full circle moment where you're meeting somebody but it has nothing to do with sports? It's based on what you've built and what he's built. Is that kind of a surreal moment for you?
Oh yeah. I mean, I remember going to Cowboys games back in the day. I passed Emmett Smith in the hallway And I used to be a Green Bay fan and a Cowboys fan, and I certainly still am. I'm more of a Cowboys fan now, having lived in Dallas for the last 15 years. But um, at the time I was probably in college or high school, and I had a Green Bay jersey on at a Cowboys game, and I walked past Emmett Smith in a suite, and I asked him for an autograph, and he was like, "Son, you're wearing a Green Bay jersey." But then I rode next to him on a plane a couple years ago, maybe a year ago, and I didn't remind him of that occasion, but we got to talking about digital assets, and I said, "Hey, you should come out to our conference." So we're excited to have him.
That's pretty cool. With so much momentum in the US, and similar to my questions around, like, hey, with so much happening in the energy sector and racing against China, is there anything we're missing? Are you having any discussions on stage where somebody's like, hey, I love everything that's happening for the industry, but even to your point, some of the meme coin stuff is like, hey, do we really have to get involved in? Like, if we're going to be taken serious, can we just kind of remove that stuff from what we're trying to do? Because that is the things that the naysayers and the scrutinizers are always going to pick up on. Is there anything that we should be a little bit cautious because we are moving so fast again now?
I think so. I mean, I've seen some projects say, "Hey, we're going to do whatever we want because we're not going to. This is Trump's SEC, and they're not going to come after us." That's absolutely the wrong attitude. That's going to get us burned as an industry. And I think the behavior from the Trump family in particular, particularly the meme coins, was hugely problematic. Certainly not. There's a distinction there. What Eric Trump is doing with American Bitcoin and HUD is right down the fairway and exactly what we would want to encourage, which is just building a really strong company. And there's no pump and dumps involved there. That's building infrastructure. That's very exciting. But there are some things that other advisors to the president and people in his circle have done that are just inappropriate, and we got to call it out when we see it.
And is it the take that like, hey, the world, liberty, like something like that? It's like, okay, you're building your business, but what is the debate here? That like, of course, Trump wants all these digital assets, executive orders to go through. He's holding the bucket with all of his companies and his friends, and just collecting digital asset dynasties. And all these, Bo Hines is going over to TED. Like, you're seeing a lot of these transitions happen, like really in the last 8 months. Is that the concern? Is that, hey, who's watching? Because it's so transparent. Like, how come they're now billionaires and we're still here, trying to figure out what's the difference between a stable coin and a meme coin?
Yeah, I think it's the pump and dump stuff that's very concerning when you're dumping tokens on retail, or when you're saying, "Hey, the top 200 holders of my meme coin can come to dinner at the White House." That's where we get a little bit concerned.
The buzzwords this year have been digital asset treasuries, DATs, and stablecoins. Can you share maybe your insights on these two categories and maybe what conversations you'll be having on stage at NABS? Because I'm sure everyone's now come up with a digital asset treasury apparently.
Yeah, we do have a panel with some of the CEOs from some of these DATs, and we're optimistic. I think the last month or two, the NAV compression has been very real. Some of them are trading below, their NAV, and that's concerning, I think. But we'll eventually turn around, and so that proliferation of that strategy is actually non-competitive. The better. The more companies building digital asset treasury companies, the better they are likely to do as a segment. So still bullish on that. I think the major differentiator is going to be, what are the operating companies doing? Are they strong functioning businesses? Because anybody can just do a SPAC and buy Bitcoin, but what is the underlying business? And if you're not Michael Saylor doing some incredible financial engineering, then you have to have a different strategy, a diversified strategy, and that is utilize Bitcoin as a pristine asset, as pristine collateral, run a good operating business, whatever that may be, and hopefully the market rewards you for that. And then, of course, stablecoins, we're seeing incredible growth. The 12-month rolling average, if you look on the Visa dashboard, went up from like 37 trillion average in transaction volume over 12 months to the new 12-month rolling average is, approaching 50 trillion, right? So the growth has been pretty tremendous. probably slowed down a little bit here in the last week of September, just because of the long liquidations that we've seen this week. But that's the nature of any industry.
Whether it be, the NABS conference or just building TPC and TBC in general, do you have any advice for those that are looking to build a similar organization, either in another state because they see this, or even another region around the world where they're like, hey, especially now it's hot. Do you have any words of advice for getting into this, especially when you're at some top tiers and when it comes to politics and the safety of your own family? Like, we're seeing a lot of these things intersect. Do you have any advice for anyone trying to build a TBC where they live?
Yeah, I'd say at the state level, there's probably only enough room for one trade association in any given state. So if you already have a state association, it's it's a long slog, right? These are nonprofit entities, so you can't like grow it and sell it or exit. So most people are going to be builders and entrepreneurs building for-profit companies, which is great. I'd say there aren't, relative to other growing, like if you say relative to AI, there are far fewer founders per unit of market opportunity in digital assets than there are in AI. And that's for a lot of reasons, but one of them in particular is just because there's a little bit of a social stigma still around the digital assets industry that we have not yet shaken. So that's why we do see more founders per unit of market opportunity in AI. So I'd recommend, hey, if you're considering building, you've got perhaps more opportunity and less competition to build in crypto than in AI.
Possibly because a lot of those crypto people moved to AI and they moved from cannabis and real estate and they keep on jumping around. So you can at least account for a quarter of the people aren't going to be around by the time the next new thing comes out. And that's super interesting. And I'm just curious, any other exciting announcements? Or, you just mentioned the nonprofit thing. How does somebody go about that? Is there other opportunities for you because you've built such a huge network that you can maybe go advise for companies? It feels like you're entrepreneurial. So, how does that work? Or is it like, hey, I picked this mission, I picked this as my purpose, and I'm focused here, not on maximizing maybe profits and personal income, but on impact that we can have, 20, 30 years from now? Or is it maybe just the perks of like, hey, me and Emmett are going to be sitting together on stage having lunch afterwards, and, my childhood dreams have been met. That's good enough for me.
I feel like there are certain things that I can do. Most things, though, as in my role as president of the TBC, present conflicts of interest. So I typically don't do consulting or things on the side unless I've cleared it through board of directors and it's been cleared and vetted for no conflicts of interest. So I'm pretty dedicated in the mission. That doesn't mean that I'm going to be at the TBC forever, but I do think that my mission is going to be particularly around making Texas the financial capital of the world and whatever form that takes.
Awesome. Any other exciting announcements coming to NABS? Maybe like, is Mike Modano going to come out and do like a Dallas Stars, Minnesota North Stars reunion? I'm not sure. Anything else coming for 2025 or at NABS in the next week or so?
I think the most compelling opportunity is actually we're hosting Governor Abbott at the pre-NABS event at the Crespi Estate, which is just a beautiful estate here in Dallas. So VIP gathering there with some top-notch industry leaders and the governor. I'm excited about those conversations for sure.
Is there a book or a podcast or idea that has really shaped your thinking as, founding and being the president of TBC? Something that you can be like, oh man, through those tough times, like the Bitcoin standard, I knew this was going to be is there anything that comes to mind where you're like, maybe people should read this before you believe anything that we say on this podcast? Read this book and get the foundation or the fundamentals down.
So on Bitcoin, I'd say Inventing Bitcoin by Pritzker, and then of course the Bitcoin Standard by Safety. But broader than that, I've really enjoyed Dale Carnegie, How to Win Friends and Influence People. That has helped me quite a bit in the trade association world because a lot of it is building influence through making connections with people. So that's been one that I've read a couple of times. I'm looking over at my bookshelf here at others that I've read over the years. But
You've
yeah,
been building for the last 6 years. Is there any characteristic that you see in people that have like, hey, they're not moving on to AI just because it's hot? Like, is there any characteristics or a vibe that you're getting from people that have been in the trenches with you over the last 6 years, whether at TBC or just they're at industry events in 2018 and they're still there at industry events in 2025? Any characteristics from them?
what I'd say is there's a lot of people that like to make noise, and what we find is those are often the people doing the least amount of building. So the excellent founders, the excellent builders that we're watching, and even executives at large corporations like Galaxy or Coinbase or others, are doing a lot of that work quietly and professionally. So I typically try to avoid the people that are making a lot of noise.
They don't have to be controversial on Twitter or anything else. Lee, what's the best place for people to find you? Are you living on crypto Twitter? Do you like a little bit more composed LinkedIn? Where can people find you, or they just have to show up to this event and see you in person?
Now, both would be great. I am on LinkedIn and Twitter. I'm Lee underscore Bratcher on Twitter. You can find me pretty easily on LinkedIn. And then, come to Texas Capital. It's the Wednesday event before NABS, and then North American Blockchain Summit on the 9th and 10th of October will be a really good week to be in Dallas.
I can't wait to see pictures of you and Kolea and Jade and all the amazing you and Emmett. Maybe you got to play a little bit of football in the background. You never know if you get to throw a pass to Terrell or fake a handoff to Emmett. That's super cool. Lee, thank
That's
you
a
so
great
much for
idea.
joining the Around the Coin podcast today.
Thanks for having me, Stephen.